Hello everyone, welcome to Boss Economic World. I'm your host. Today, we are going to peel back the heavy curtains of Westminster, look past the panic in the headlines, and analyze the brutal truth behind what might just be the most dangerous week in British economic history since the chaos of 2022. Today is November 22nd, 2025. If you are walking past Downing Street, you might smell fear. If you are sitting at a trading desk in the City of London, you smell opportunity, or perhaps, smoke. We are standing at a precipice. In 4 days, on November 26, Chancellor Reeves is scheduled to deliver a budget that defines the fate of the United Kingdom. But here is the twist: the script has been shredded. The plan has changed. And the Prime Minister, Keir Starmer, is busy looking over his shoulder to see who is holding the dagger. So, grab your coffee, or perhaps a stiff drink. Let's restore the full picture of this British economic thriller. Let's set the scene. It has been 16 months since Labour's landslide victory in July 2024. Do you remember that? The biggest win since 1997. The promise of stability. The promise to end the chaos. Global investors were lining up, convinced that the adults were back in the room and that the erratic populist economics of the Conservatives were gone. Fast forward to today, November 2025. That optimism hasn't just evaporated, it has soured into something toxic. Keir Starmer's approval ratings aren't just underwater, they are exploring the Mariana Trench. And when a prime minister is weak, the sharks start circling. Rumors of a plot to oust Starmer have moved from whispers in the tea rooms to headlines on the BBC. The man at the center of these allegations? Wes Streeting, the health secretary. Now, Streeting has publicly pledged loyalty, denying he wants the top job. But in politics, when someone says, "I have no designs on the crown," you should probably double the guard outside the king's bedroom. This political instability is the critical context for the economic mess we are in today. Why? Because Chancellor Reeves was preparing to do something incredibly unpopular but arguably necessary. She was planning to raise income tax. She was going to break a manifesto pledge to fill a black hole in the finances. But when the Prime Minister's job is on the line, you cannot antagonize the voters or your own backbenchers. So, earlier this week, Reeves and Starmer performed a massive U-turn. The income tax hike is dead. It's off the table. They don't have the political capital to survive it. But here is the problem, and it is a mathematical one, not a political one: the money is still missing. Reeves is facing the biggest test of her career next Tuesday. She needs to find £30 billion. Why £30 billion? Let's break down the boss math. First, she needs to plug the gap in day-to-day spending. Second, she wants to double her fiscal headroom, the emergency buffer, to £20 billion to prove to the markets she is ironclad. Third, the Office for Budget Responsibility, the watchdog that barks when the government does bad math, has slashed its productivity forecast by 0.3 percentage points. That sounds small, but over a few years, that is billions of pounds of lost revenue. Reeves is currently trapped in what economists call a trilemma. Imagine a triangle. You can only pick two corners. 1. The bond markets: these are the investors who lend the UK money. They want fiscal discipline. They want debt to go down. If you scare them, they crash your economy. 2. The manifesto: these are the promises made to voters: we will not raise income tax, national insurance, or VAT. 3. The progressive backbenchers: these are the Labour MPs who want to spend money on public services and help the poor. They are currently furious about welfare cuts. Reeves tried to please the bond markets and the backbenchers by raising taxes. But the political crisis forced her to retreat to the manifesto corner. Now, she has to find £30 billion without touching the three biggest tax levers that account for 2/3 of all revenue. She is trying to thread a needle while riding a unicycle during an earthquake. As Matthew Lawrence from the Commonwealth think tank put it perfectly, politically, she is trying to thread a needle through a trilemma. The bond markets, the manifesto, and the pressure to do something on living standards. Let's talk about the most ruthless characters in this story: the bond market vigilantes. These are the global investors who buy government debt. When they lose confidence in a country, they sell the bonds, borrowing costs spike, mortgages go up, and governments fall. In early October, Reeves was courting these investors. She promised ironclad rules. She triggered a rally in gilts. But when news broke this week that she was scrapping the income tax hike because of political panic, the markets realized she is prioritizing her party over the economy. The rally is gone. Roughly half the gains made in October have been wiped out in days. Why are investors so nervous? Because the world is a dangerous place for debt right now. France is shaking as its fragmented parliament fights over a budget. Japan is seeing stocks fall over stimulus fears. Even US treasuries are losing their safe haven status as US debt spirals. Mark Coombs, the billionaire CEO of Ashmore Group, said it bluntly in Singapore yesterday: once confidence is gone, you have a real problem, you do get a market shock. He didn't need to say the nameless truss, but everyone heard it. It has been 3 years since her mini-budget blew up the UK pension funds. The scar tissue is still there. The UK pays a Moron Risk Premium, higher interest rates than Germany or the US, because investors remember that British politicians can be reckless. If Reeves walks into the House of Commons on Tuesday and presents a budget that doesn't add up, the Vigilantes will extract a heavy price. Michael Brown from Franklin Templeton put it chillingly: the Chancellor and the Prime Minister have put party in front of country, and bond market vigilantes will likely extract a price. So, if Reeves can't raise income tax, VAT, or national insurance, how does she get the £30 billion? She has to go dumpster diving for revenue. She has to pull dozens of smaller, messier levers. Paul Johnson, the former director of the Institute for Fiscal Studies, called the remaining options a moldy smorgasbord. It's a buffet where all the good food is gone, and all that's left is stale bread and weird pickles. Here is what is likely on the menu for next week. 1. Inheritance tax, lowering thresholds or removing exemptions. It makes the wealthy angry but doesn't raise huge sums. 2. Capital gains tax, increasing rates on asset sales. This discourages investment, exactly what the UK needs right now. 3. Fuel duty. Every chancellor since 2011 has frozen fuel duty because drivers hate it. If Reeves unfreezes it, she finds £5.5 billion, but she loses the working class vote. 4. Fiscal drag. This is the stealth tax. You freeze the thresholds at which people pay tax, so as inflation rises, people drift into higher tax brackets. It's sneaky, it's cynical, and it hits the poor hardest. The problem with this approach, as Rupert Harrison from PIMCO points out, is that it creates a long list of uncertain taxes. Markets hate complexity. They prefer one big, clean lever like income tax. When you rely on 20 small, weird taxes, you get distortions. You get the omnishambles. For those too young to remember, the omnishambles budget was George Osborne's disaster in 2012. He tried to tax hot pasties and caravans. The public revolt was so bad he was booed at the London Olympics. Rachel Reeves is already getting booed. Last Tuesday, at the Lloyd's British Business Excellence Awards, a pre-recorded speech of hers was played. The room full of business leaders booed her. That is a very bad omen. Here is the ultimate irony of this entire situation. Labour's grand plan was growth. Their goal is 2.5% annual GDP growth. Currently, we are stuck at a pathetic 1.3%. To get growth, you need investment. You need businesses to feel confident. But to fix the debt, Reeves is about to launch a massive fiscal squeeze, £30 billion of tightening. Capital Economics predicts this squeeze will lower economic output by 0.2%. Do you see the trap? To please the bond markets, you have to cut debt. To cut debt, you raise taxes and cut spending. But raising taxes and cutting spending kills growth. And if you don't have growth, you can't pay off the debt. It is a vicious cycle. The government has promised supply-side reforms, building 1.5 million homes, a third runway at Heathrow, the Sizewell C nuclear plant. But these things take 10 years. The bond markets want their money now. As Alesh Kaupni from Vanguard warns, this idea that the government needs to stabilize debt to GDP is very important for bond markets, and reducing growth significantly actually goes against all that. The mood in the real economy is grim. The wealth-friendly Blairism investors hope for has been replaced by a government that seems to view private business as a piggy bank to be smashed open. The £26 billion payroll levy on employers introduced in the first budget was viewed as a disaster. It stoked inflation and killed hiring. Reeves promised she wouldn't do it again. She told the CBI she was not coming back with more borrowing or more taxes. Next Wednesday, she will almost certainly break her word. She may keep the letter of the manifesto, but she is shattering the spirit of her promises to business. So, what is the truth behind this event? The truth is that the UK is currently suffering from a crisis of political economy. You cannot separate the economics from the politics. We have a Prime Minister who is fighting for his survival against a mutiny in his own party. We have a Chancellor who is handcuffed by election promises that were frankly unrealistic. And we have a global market that is tired of the UK's drama. The two-party system in Britain is fracturing. Labour is polling worse than ever. The Conservatives are still recovering. The populists on the left and right are stealing votes. Steve Williams at Amuva Asset Management sums it up: the whole political economy is on shaky ground here. What should you watch for on November 26th? 1. The gilt yields. If the yield on the 10-year gilt spikes, Reeves has failed. It means borrowing costs will rise, wiping out any benefit from her tax hikes. 2. The inflation forecast. Reeves hopes to bring inflation down by controlling administered prices. If the Bank of England buys this logic, they might cut interest rates in December. That is the lifeline Reeves is praying for. 3. The rabbit. Every chancellor tries to pull a rabbit out of the hat, a surprise positive announcement. But with a £30 billion hole, it's likely to be a very small, skinny rabbit. In 2012, George Osborne delivered a disastrous budget. He was booed. He was humiliated. But 3 years later, his party won the election. Rachel Reeves is hoping for the same redemption arc. She is betting that if she takes the pain now, if she swallows the booze, angers the backbenchers, and bores the bond markets into submission, she can turn the ship around by 2027. But the margin for error is zero. If she gets this wrong, if the markets revolt or the backbenchers trigger a leadership challenge against Starmer, this government could collapse. The High Wire Act is on. The safety net is gone. And the wind is blowing hard. I'm your host, this is Boss Economic World, and we will be watching the numbers closely next Tuesday. Because in this economy, the numbers never lie even if the politicians do. See you next time.